Hi everyone, my name is Dennis Kалышкин. Just before we start, could you write in the comments if you hear us and see the presentation well, so that we can proceed with our today's presentation.
I do, Dennis. Can you hear me?
Yeah, I also hear you, Gustavo. I believe we give a couple of minutes for our participants to join and get ready for today's presentation. I'll first of all I'll do the quick introduction about myself, about you, and then we'll move forward with the presentation today. Okay.
That's great. And as we wait a couple minutes for the remaining folks to join us, one thing that I would love to understand is really the profile of the audience. And if you could just send really a one-line description about you, so what you do in your company and what your company does and where you're from, that would be great, so that we can adjust this conversation, this presentation to your needs. So I kindly invite you all just to present yourselves really quickly in the comments, so that we can have an interactive conversation today.
Yeah. So please write this short introduction in your comments, and maybe also when you're writing, like, what's the interest in participating in the webinar? Like, just mention if you're already operating in Latin market, or you're thinking of exploring an opportunity to expand there, or you invest there, just for us to understand what's the interest to the webinar.
So at first we have Zakar, who's a product marketing manager from Russia. Good that he's studying opportunities for his company. What about the others? I think people are shy today, Dennis.
Yeah, they're always shy, but they absorb information, and later on they get back with the questions. So oftentimes in personal messages. Yeah, and while we are all joining, I will send you a video recording, and it will be uploaded to YouTube sometimes I guess on Saturday. It takes a little bit of time to process it for me, and it will be always available on the YouTube channel Ask VC. And yeah, so don't if you're at some point you leave early at the webinar, not worry, you will be able to see the video record. Okay, we'll take one more minute just to wait for other participants joining, and we should start.
So, and I'm glad to see that many people are replying here and telling where they're from, what they do, just like Zakar, Telmo, Nina, Abby, Alina, and Roman. That's great. Nina.
So, even from Israel. Cool. Yeah. So really international audience we have today.
Yeah. When we first spoke, I was expecting a Russian majority audience, and it's good to see that we have people from all around the world.
Yeah, so let's start. Thanks everyone for joining our webinar today. My name is Dennis Kалышкин. I'm a principal at I2BF Global Ventures. It's a New York venture capital, investing mostly at seed and pre-series A stages in companies doing business in the United States. And for the last year or so, I run a nonprofit initiative called Ask VC, where I try to share the knowledge and practical guidance and insights on various aspects of doing business in various geographies. And today I would like to discuss with Gustavo expanding to Latin America, because I had an experience of researching and even have a small investment in Latin America in SaaS company. And what I see is that there is a really interesting potential of expanding to this market. And also I see the growing interest especially from the startups outside the US with small local markets, which explore the opportunity to expand to Latin America in general or Brazil in particular. And also I see that SaaS business model in Latin America, in my opinion, is a little bit underinvested. So there could be a potential. So that's why I decided to ask an expert on the market to talk a little bit more, give us a little bit more of insights on the market. And we have Gustavo Souzа. Gustavo, hi. Thanks for joining us today. Please present yourself, or tell us a little bit about yourself, and we're happy to hear your presentation.
Thank you first for the invitation, Dennis, and everyone. Thank you for investing your time being here with us, talking about expansion of SaaS businesses and more in general tech businesses to specifically the Latin America region. And before we start talking about the topic, let me first introduce myself. So my name is Gustavo Souzа, and I've seen many Portuguese people here, so I think they're probably the only ones who can pronounce my surname correctly at first, but it's no big deal. And so I'm originally from Brazil. I'm in Brazil currently. And the reason why I love this topic is because I actually sit at both sides of the table currently. So I manage a small pre-seed investment fund, and we throw in, I don't know, $100,000 checks on promising companies that we encounter mostly across Latin America. So I need to evaluate companies that have high potential and many times international growth potential, and assess and help those companies really execute on the plan. And during daytime, I also have a full-time job at Rock Content. And Rock Content is a content marketing company. It was born in Brazil. It's almost 88 years old. And recently, in the past 2 years, we've expanded. We've increased our expansion rate. And I've learned with the company how to expand across LATAM. And I need to say that although we started in Brazil, expanding laterally to the other Latin American countries is not natural. It's not easy. It requires a lot of effort, planning, and specific actions. And we can discuss this. And in the past 2 years, we've also expanded to other countries such as Canada, US, and I've managed a business unit that had operations mostly in Europe and in the US. So I love this topic of LATAM expansion. And as Dennis has said, I completely agree with him that there is lots of untapped potential in Latin America. And that's what we're going to talk about here. And in terms of goals for us to align our expectations here, I really wanted to have this as an interactive conversation with you, so that if you want to dig deeper on a specific topic, just send the questions, send your comments on the chat box. I think it's down below on the right for everyone there. And because this time is for you, and if you can guide me to what is more interesting for you, you get more value out of it. So let's get started. And before we start talking about LATAM, I just wanted to make a quick alignment with you, because as I was building the slides here, every time I typed LATAM, these results showed up. And I don't think, this is the agenda. So that before I start, this is the agenda, just for you to have a general understanding of what we'll be covering here if you don't ask any questions. So why you should expand to LATAM, when you should do it, where you should start from, culture and some particularities, some final tips and resources, and a Q&A session. So let's get to it. Why LATAM? So before we start talking about LATAM, every time I type on Google LATAM, this image shows up for me. So LATAM right now is a joint venture between a Brazilian and a Chilean airline companies, and that's not what we're talking about here. We're talking about the Latin American region. And when people think of why should I be expanding to Latin America, why shouldn't I, and so on and so forth, here I won't be able to walk you through my line of thought due to the limitations of animations here on Webinar Jam. I wasn't counting on that, but I really don't mind. So we can walk the path of expanding to LATAM either through an elimination process. So we look at other geographies and eliminate the ones who are not a good idea for some companies that you work for, or we can look at it at a deliberate choice. So we look at the region and see the reasons to go for it. And I just wanted to take you on both of these paths. So first, the elimination path, I'll go in a really simplistic way, and I won't cover all the details, and please feel free to disagree and write your opinion on the comment section. And I hope you don't mind the slides. It's not all the presentation that needed animations, so it won't happen very often. So if we look at the US and to Europe as expansion possibilities and paths, one thing that most companies will face is the cost of customer acquisition is super high in these regions. So the CAC is enormous. In these regions, since there is much more money flowing around, there most likely are some consolidated players in most segments. So you will need to start from scratch, and you will be fighting against big dogs and with very deep pockets, and with a history and tradition in those markets. And sometimes it's not worth it, especially when we're thinking of other startups that are not as deeply funded as typical Silicon Valley US startups. So sometimes it's worth taking an alternative path instead of going directly to US and Europe and trying to make revenues in dollars and euros. Europe has yet another thing that complicates the expansion across the continent. So each color here represents a different language. So if you really want to master and conquer Europe, you will need to localize, translate your product in many different languages. Otherwise, you will need to give up on some geographies. So if you feel that US or Europe is not the right fit for your company at the time, we need to look at other geographies.
Gustavo, in Europe, sorry for interrupting, Europe is typically not only the problem of the various languages, but also the variation of business practices, because French and Germans and Italians are doing business differently, and oftentimes you need to hire local people, open a local branch, and attacking each country is not only translating into separate language. It's much more complicated.
Yeah, and cultures in terms of how people buy, how people sell, and they vary a lot. So just some context, I've lived in Europe for 2 years, traveled a lot, and I've seen and felt all those differences myself since I have friends from all around, and it's really worlds that were built apart from another. So getting back to it, if US and Europe is not the right fit for your company at the moment or at all, you need to look at other places in the world. And some other places that people typically look at are China and India. And when people think of expanding to China, my only thoughts are good luck, because I sincerely and personally don't know how to do that. I know that you need to partner up with some local people that have influences there. You need to spend a shitload of money with lawyers and consultants and all sorts of things to be properly regularized. And we all know that when it comes to conflicts, and if you are in front of a judge, they will always favor the national company, the national guy. So I've seen cases of many companies try to expand to China, and most of them unfortunately fail. And most of the time, a Chinese copycat comes up, or not a copycat, but a really other companies that serve the same customer and solves the same pains end up taking their place. And the most recent example is Uber. So I don't need to be telling this story because I bet everyone knows what happened there. And but China is very promising. I just don't know how to conquer that geography. And another promising geography is India. Since India has 1 billion plus people, they're still growing their population like crazy, and the expected GDP growth for India is it's crazy in the next couple decades. But one thing, once you go and try to expand to India, you really have to know your game and have very clear differentials, and and even better if you have very strong network effects that would create a moat around your business. Because what I see happening there are the local Indian companies commoditizing every company, every category they see. And they have a very clear market differentiation, which is labor cost, and they also speak English, which is not normal for all countries in the world to have a population that most of the people speak fluent English. And so they play a game of commoditizing categories. They find a category and they play a strategy just like Jeff Bezos does with Amazon. So your margin is my business. And we see lots of Indian companies doing a very good job in terms of growing and also solving for the customer. And this is a hard geography to beat. And but if you have a business with clear network effects, that would be hard to be either copied or the customers prefer an alternative just because it's half the price or I don't know, 1/5 of the price. Then you should I incentivize you to look at India with care. But if it's not your case, I would still take a look at it, but with some more cautiously, sorry. And folks, please, if you disagree, please let's start a discussion here on the comments. That's great. So we've eliminated China and India, so almost half of the world's population. Let's look at other geographies and play our elimination game. So Africa. Africa has a considerable GDP. It's a huge land, but the tech market is still very immature. So internet access there is very poor, and people in general don't have lots of people and companies don't have lots of extra money to spend on things that are not strictly necessary for their day-to-day activities. So I'm overgeneralizing here. There are opportunities in Africa, but it's a tough game to be played since the resources are very scarce there. Australia, great market. Speak English, easy to expand to, but the only problem is that it's a small market. So the population consists of 25 million inhabitants. Then you also have right around here, New Zealand. That's 30 million folks. And once you're done with that. There's no place else to expand here. So you really need to find a broader and larger market if you want to go big with your company. And we've looked at many geographies here, and I'm omitting here on purpose some other geographies such as Southeast Asia. And the reason for this is I am not an expert on that geography, and the friction that I see for many companies that were born in Europe, in the US, and in those more Eurocentric and westernized countries is the culture barrier. So they have a different culture from Western, typical Eurocentric countries, and doing business there is a whole different game. That's why in this elimination game, we end up looking with lots of care to Latin America. And here, once we're talking about Latin America, back to school, some numbers that we might have forgotten from high school time. So the population of Latin America is 650 million people and growing. So it's more or less half of India's population, half of China's population, and its GDP is a considerable amount, although it still needs to grow more to play a strategic and differentiate itself in a global perspective. We're talking about 26 million small and medium enterprises in this region. For those of you who focus on B2B, who work for B2B companies. And once we're talking about Latin America, the consensus is that there are 33 countries that were colonized by Latin originated speaking countries. So either Portugal or Spain or France. The GDP per capita, I will show you a comparison in the next slide, but just for instance, it's around $9,000 per person per year. And there's the Mercosur, who's a large trade bloc. And when we think of Latin America, this is one thing that we need to keep in mind. There are two main languages that dominate these continent.
Gustavo, could you tell about a couple of words on this trade bloc, because it's not familiar for most of the listeners. So what is, what countries it involves and what it means, like what should businessmen account for if they try to leverage this opportunity?
Okay, so the Mercosur was modeled after the EU, and so I don't know exactly how many countries are signatories of this treaty now, but I know that Brazil, Argentina, Uruguay, Colombia, I guess. I don't know if Venezuela is still on it or if it was banned from the bloc. And so most of the largest South American countries are part of this bloc, and the intention behind it was to create a free trade zone to incentivize these countries to trade among themselves. So instead of buying, wheat from the US, having a fiscal incentive to buy wheat, Brazilians to buy wheat from Argentina, because there would be no taxation involved. But along the, 15 years, I don't know how many years it's been valid, the countries impose lots of conditions and exceptions to protect their economies. And at the end, it's not as generalized as the Eurozone is. So at one point, people thought of having one single currency, but the single currency is not even being discussed anymore. And many goods can be traded without taxations, but most of them still involve. So Telmo provided us here with updated information, and the parties are Argentina, Brazil, Paraguay, Uruguay, and it seems that Venezuela is still a signatory here. So I'm being very transparent and frank with you. My point here is not to sell Latin America at all costs. It's really to provide you the naked truth and provide you with the information you need to make the best decision for your company. And so Mercosur is interesting. It's always been promising, but today in the tech world, it plays no big role. It can help the offline economy boom and give it a boost, but there needs still some political alignment to make it work. And moving forward here, so this slide is a great slide from a very renowned VC here. It's called Atlântico. It invests in mostly in companies from Latin America. And you'll see other slides from them. I just took it because they were great. And I just need to quote them out of respect and admiration. And so 1/3 of Latin America's GDP is Brazil. So this is a thing that we'll be seeing in, I think, in the next slide as well. Yeah, it is. And no, it's not. But 1/3 of the GDP comes from Brazil. The other 2/3 come from the other 32 countries there. And if we're looking at these countries in terms of GDP per capita or total GDP, that's how they compare themselves to other big countries here. So in terms of GDP per capita, it's way better than India. And China grew quickly. And I don't know, 10 years ago, 15 years ago, China would be like here, and Latin America a bit below a bit. But China is still growing quicker. And that's how the geography looks like. And if you would stack the largest Latin American economies here, just for you to see how things really look like, there is a power law involved here. So 2 countries of this group account for more than 50% of all its GDP. We'll be seeing more data regarding this, but if we move forward and we're talking about culture and technology adoption, we're seeing that 73% of the population has access to the internet here. And here are all the Latin American countries stacked. And if you see these names, you'll see more often here. So Chile, Peru, Colombia, Argentina, Mexico, and Brazil. Venezuela is a very large country, but there is a political turmoil there. We'll quite ignore them. And I wouldn't be trying to grow there if I'm not in the petrol industry.
Yeah, and speaking of the penetration, like you given the the absolute numbers, but we should stress that Chile and Brazil are one of the most digitized and most the countries with the biggest internet penetration, while Mexico is a little bit behind it. So we should also keep it in mind.
Yeah, I was also seeing some graphs here, like how long each people from different countries spend on the internet. And I don't know, maybe Philippines was number one with 9.5 hours per day spent on the internet. And I think a second or third came Brazil with just 20 minutes less. So in reality, Brazilians are fully, not just Brazilians, the whole region here is connected to the internet the whole day. But when we say internet, it's not what you're seeing here, which is me using a computer and streaming from a cable internet and having access to a big screen and so on. So most of the population still accesses the internet through their smartphone. And that's their gateway to be connected to the rest of the world. And I won't even say the world because they're typically limited to their own environment and language and community, and we can talk about that
and
later.
How big is this connection? Because, for example, in Africa, yes, you have a lot of mobile connections, but it could be very slow and downloads. What's specific here?
Let me see if I have. So answering to your question here, Dennis. So this is the current state of the internet in Latin America. So we're looking mostly at 4G and 3G connections, and some people still need to be covered just by 2G, which you can really do much with that besides messaging and so on and so forth. But if we think of internet for the majority of the people, it's not what you might be used to, which is the total Google liberty and a universe, which is infinite of things to consume from. So most of Latin American people consume the internet through apps that they're used to. So the absolute king is WhatsApp. We'll be talking about it later. Facebook, Instagram, and occasionally they go to their browsers and use it. So if you want to hit the average Latino on their cell phone, the best way to do it is still buying media ads on the most used social platforms. And this is something that is improving year after year, but this reality will sustain itself for a long time still. So having people connected to the internet mainly through their phone. And so here is the rate of evolution of mobile subscription in Latin America. So we can see how fast having a cell phone became indispensable for all the people here in the continent. So every year it grows 10%. It's decreasing now because there aren't much more people for it to grow to, but it's still increasing. And what else? So this is some Brazilian data, but which I have more access to, and but you should expect more or less the same kind of results across Mexico, Colombia, and Chile for sure, maybe even Argentina. And here you see that the households who have a very low income are those that have a tendency and the likelihood of not being connected to the internet. So typically people that live in very rural areas and that don't earn enough to raise themselves from poverty, which is something that still exists in the region. What else? Another thing that is very interesting is the e-commerce boom. So the e-commerce boom was already happening, not just because of COVID, but COVID surely accelerated the e-commerce penetration, as you can see here in this graph. This graph here forecasts pre-COVID and post-COVID, how things look like and how many, the difference in terms of people that are now using e-commerce on a regular basis. And if you take a look at how they are represented in different countries, here are the numbers. And you see that there are some differences, but they're not absurdly high. What else? One cool curiosity is that the Argentinian country had historically been a country with, it was wealthier until, I don't know, the 2000s or 1990s, much wealthier than all the other countries, if you take GDP per capita basis. But they're facing like 20-year long crisis and still don't see a way to get out of it. And so their growth rate is, if they're not growing actually, unfortunately, but they still inherit some of those cultural advantages that they had from the past. What else? Some other things, some good news that we're seeing with data from LATAM here is the bribery rates in different countries, as you can see, 2017, 2019. So people are being less bribed from government officials. And you can see that different countries have very different rates of bribery here. And also there is a tendency of debureaucratization across the region, and that's great to see. And but there's still a lot of room to improve for most of these countries here. Let's move forward. Any questions, folks? Anything you want to discuss or dive deeper? I'll be moving ahead. And if we're talking about the impact of COVID, we can see here a forecast of what people expected from 2021. I think this report was sent 4 months ago when people still didn't know about new COVID waves and all sorts of stuff. But many of the Latin American countries are being hit hard in their economies. And there is a rapid recovery expected once it's all over. What else? And here are some more subjective things I wanted to outline and discuss with you, which are culture and related to culture and technology adoption. So one thing, if you're thinking about expanding to Latin America, this European colonization. So this makes the general people's culture and how people relate to each other and the values that people admire and cultivate very similar to what you can see in North America, in Europe. And I've written here Northern Asia more, wanting to describe Russia and Balkans, who are deeply connected to Europe. So in my personal experience, Europe, North America, and South America are all variants of this whole European colonization origin. And it's very different if you compare to, I don't know, African countries. And once I stepped foot in Egypt, I knew that I was in a different world. And if you've never been in South America and you come from one of these geographies, you won't get shocked. It will be just a variation of what you're used to. And this hindsight advantage. So this is one thing that entrepreneurs in South America typically look at what's happening in the US. And it's somewhat predictable that what is happening in Europe, in the US, and now in China will also have a similarity in Latin America. So you can learn from the history, and this is something that you can apply here in Latin America. And what we see is companies that start a new category, they educate the market, they create a market, and once they're done with that in more advanced markets, they then expand to Latin America. So it's just like if Latin America was 2, 3, 4 years lagging behind in the past. But you should use this in your advantage. And that's great if you use this whole hindsight advantage to you. LATAM countries are open to foreign companies. You'll see them all around. There are no nationalist barriers for tech companies. I don't really see that, just like you can see in China, India, and so on and so forth. And the consumers here, they are typically open to new products, new experiences. And one cool thing to outline here is there was an ancient social media called Orkut, which most of you maybe haven't even heard of. It belonged to Google, and it grew like wildfire here in Brazil and also in India only. And it was very good social media around communities and blah, blah, blah. And everyone was there. But in 2010, 2011, when Facebook became a thing and had a better user experience than Orkut, you could do more on Facebook and so on. Everyone migrated from Orkut to Facebook in less than 1-2 years. So there was no one at Orkut left. Everyone moved to Facebook because people are willing to experience new things as long as it's good for them.
Yeah, and this is also very important because based on those interactions and reports on Latin America I had, is that people are, they like to have a really good user experience, and they would like to have a good, great maybe content, nice looking. So the quality of this visual communication should be great, and also the expectations on the user experience and the service, as far as I understand. Is that a fair understanding?
Yeah. People here are spoiled, and in terms of expecting awesome UX and from whatever they consume, and being it free or a paid service, people expect that. And we're being each day more and more spoiled by great companies that are investing heavily on that, and that becomes the new normal. And if you see things that fall below this line, it loses credibility. So it's not just ship anything, pardon my language, any ship shit and see if it sticks. I wouldn't try this approach here because people are getting spoiled in Latin America when it comes to UX. So we'll be covering more information about LATAM, but right now I just wanted to discuss another topic, which is when you should expand your SaaS startup to Latin America. And this is a very, this is not a question, this is really a discussion. There is no right or wrong. I have my opinion, and it's always case by case, and that needs to be analyzed. And I'll be providing how I see things, both from the investor perspective and also from the operator perspective that works every day in a company that is expanding globally and also in Latin America. And so one thing, there are no animations, so I kindly ask you to focus on the upper part of the text here. And so companies that are born in countries that have less than 50 million inhabitants, they go international twice as fast as companies from countries with large populations. So I saw someone in the audience here from Israel, and Israel is for me the best example for that. So every startup that is born in Israel is born already with a global mindset from day zero, because there isn't a large enough total serviceable, attainable market. You cannot grow big being Israel focused only. And this is a mindset that also applies to companies that are born in Latin America. But not only before COVID, Latin American companies were starting to see some local examples of companies growing very big. For example, Mercado Libre. This is the largest, I think, not only South American, but maybe Latin America company listed. And this is a tech company that works mainly with e-commerce and all sorts of things related to e-commerce. And once you start to see some peers and people next to you that could conquer the world, could conquer other geographies doing it, founders start to inhale this kind of mindset, and new companies are born with those goals in mind. But still, you will be seeing more, let's say, Colombian companies born with a global mindset than Brazilian companies, because Brazil is a much larger geography. You can grow really big there. And if you compare to Colombia, which is much smaller and much closer to other cultures and countries, and that they already start thinking of how to expand to Peru, to Mexico, and so on and so forth.
And there is also what I really often heard from Latin American people is that if you do it right in Brazil, oftentimes it could be enough. So it's in many cases, especially if it's a B2C, the market could be really big enough so that you can expand to Brazil only, and that could be a really handsome market.
Yeah, and that's a great topic, Dennis, that I would love to discuss with you in 5 minutes, 10 minutes or so, which is what's the best path to go? Do I start in Brazil? Do I start somewhere else? Where? Why? And so on and so forth. And before we get to this discussion of where to start from, some requirements that Gustavo, the investor, sees of what you should have before expanding to Latin America, and most of the time anywhere else, is you need to have product market fit. Otherwise, you're not expanding. You're just testing your product somewhere else. That's not an expansion. You're pivoting, in my point of view. You need to have product and engineering bandwidth because you will need to adapt your product. And if you don't have enough folks there that could put in the hours and make it work, you will be wasting marketing dollars and your brand on a non-ideal product. You need to have enough funding because everyone knows that expansions take money, and you should not expect return on the next month. It does not happen in 99% of the times. You got to do your market research to understand the local landscape in terms of competitors, the size of the market, pricing, how you should price there, and if there are any regulations that you need to abide. So you got to do your research. You got to come up with a go-to-market strategy, which is how do I acquire traffic? How do I convert these guys? What do I do next? Do I have a local sales team or not? You have to have this figured out before actually doing that. And I'm saying here at the last line, data-driven international growth, hypotheses, and premises. So before starting, you need to have your premises of what success means. And if you're falling below your success line, you really need to reevaluate. Is it worth still pursuing this strategy? Do I need to reevaluate? What am I doing wrong here? What do I need to do differently? Or should I just head back home or go to another geography? But having an initial hypothesis and premises is necessary. I would never start this expansion without having this laid out.
Yeah, I see a question from Abby about localization. So if we expand to Brazil or other Latin American countries, can we expect that we use our English version interface, or should we localize, and how deeply should we do that? So I guess it would be a good time to stress on that.
Great question, Abby. So if you're focusing, let me check here. No, it's not here. But if you're focusing on a B2B market with a very specific user, and you know that both your buyers and your users can speak English, go for it. You might have partial success. But as we will see in a couple slides, the English proficiency in Latin America is not good. So most of the population here, also the people who work with tech, do not speak fluent English, and you will leave lots of money on the table if you do not localize your product. But before localizing it, translating, and making it sound and see like making it feel like a local product, it's most of the time worth trying to push your product in an English version to the market and see if you have enough differentiators to make it worth the localization thing. So the way I see is that the early majority will most likely use your product in English. But if you want to go mainstream and really grow, then you will need to translate it either to Portuguese or to Spanish in order to grow. And this is something that is valid for Brazil, for all countries here, not just Brazil. Peru. Yeah.
And this is actually one of the reasons a lot of there are, especially in SaaS space, maybe we will cover it later, but there are a lot of cases when the local localized local player, Spanish adopted, can overperform those English solutions, like companies expanded from the US, for example. So you can play the game of building a local copycat leader. For example, like Pipedrive did from Estonia, I guess.
They're the best example, I would say. So they're from Estonia, and they've quickly found signs that I know their experience in Brazil because I know their past country manager. But they saw that Brazil was a large market. They needed to grow there, and they quickly localized it to Portuguese and started growing like crazy in the small and medium enterprise market. So as a rule of thumb, if you're aiming at a small and medium enterprise, you will definitely need to localize your product. Otherwise, you won't go much further. But I also incentivize you to test cheap without localizing and see if anyone uses your product and provides you with useful feedback. Because localizing is not just translating text. It might be a pain in the ass. And sorry for my French here. And other things you should account for are regulatory approvals, product localization, which we were talking about, and how you will acquire customers and how you will serve customers. Do you need to have these people on the ground there talking face to face with your customers? So right now on COVID times, you don't, you can't. But this was a question that was still relevant a year ago, and it might get relevant in 2 years again. I don't know. But definitely understand if you need someone speaking the customer's language and in which areas. Is it sales and support, or what else? And you need to understand and adapt your company to that. Study local competition, both from local players and also from international players. And one thing to keep in mind is doing business in developing countries is very different from doing business in the US and Europe. And this is one thing that Dennis won't allow me to lie to you. For example, to acquire customers in Russia or in Colombia or in Peru, the costs of acquisition are typically much lower than what you would spend in Europe and in the US. But also another thing to keep in mind is the price sensitivity. So companies here are not so frivolous with their money as some American counterparts are. So every penny counts, and price is a thing to keep in mind.
Yeah, and also, when it comes to SaaS, what I heard, maybe it's not true, is that a lot of sales is going through direct sales, rather than when you talk about SaaS in the US. Oftentimes it's driven by digital channels, and so the sales tactics could also vary.
Yeah, they might vary because, for example, to have a physical, like actual humans selling in Latin America is much cheaper than having actual humans selling in the US. So a salesperson in the US would cost, like a cheap salesperson would cost $100,000 a year. And here let me talk about Brazil, and I think in Argentina it would be much cheaper. You would have a good sales person selling the local market in the local language for 1/5 of the price, like $20,000, $30,000. So you can afford to have more humans doing things that American counterparts need to automatize. But so this is one thing to keep in mind. And another thing you brought, Dennis, which is a very interesting practice here, is, and I will say about Brazil, which is Brazilians do not like to sign yearly contracts at all. Like most of the contracts that Brazilians sign, they can get off of it by paying a fine. Like, this is a concept that does not exist in the US. You're either bound to an yearly contract or maybe 2-year contract, and you need to pay all the installments until the end. And it's normal for the US, and many companies pay upfront. Many, because they get a discount and credit is cheap, and so on and so forth. In Latin America, you won't find companies that are willing to pay upfront. You will struggle to make it work. It works, just not all the time, but and it is much harder than in Europe and in the US to get upfront payments. And another thing that many international companies need to adapt when they come to Brazil are their contract practices. So I sell under a year-long contract, and you cannot get away from me until the end of the term. Because here people are used to, okay, every yearly contract, I can get away from it if I pay a fine for early termination. And a typical fine for early termination is 20% of the remaining installments. That's like the market practice. And that's what people are expecting. That's the normal. And but international companies still can get away with yearly contracts, because they say that comes from the headquarters. I cannot flexibilize on that, and all international companies do this and that. And if your product is indispensable, they will. And I work at a company that we need to sign many yearly contracts, and they will do it if it's indispensable. But they will try to negotiate and find a way to terminate earlier if they're not happy with the software.
Yeah, so it could be for small startups. It could be this pricing innovation would be as a competitive advantage compared to big players expanding from US, for example, right?
Yeah, definitely. So you have the right of early termination if you pay a fine. That makes it easier for your customers to choose your solution instead of another. So this is definitely a comparative advantage. And since we're talking SaaS here, this also messes the data, the whole SaaS predictability data that is typical in US businesses. So in the US, if you book a customer, they will pay until the end. And in Brazil, they might terminate earlier. And so churn levels are typically a bit higher because of this factor. Moving forward here. So this is a very important topic for us to discuss. I would say that the most important thing in this whole webinar, which is what are the approaches that you could use to expand to Latin America and other markets. So there are 4 different approaches. Direct, through an acquisition, so M&A, which is mergers and acquisitions, through having partners and partner programs and channel resellers, or also expanding from your own headquarters and doing everything remotely. And I would go from the bottom to the top. So remotely, channel, M&A, direct, if I am testing the waters. Like if you're expanding remotely, you have less of, you're investing less money, less time, less resources, less branding, less everything, because you're doing things from where you currently are in your headquarters.
And is it even possible for SMB or B2B companies, SaaS companies? Because in the US it's quite challenging in many cases. How difficult to is for B2B sales in Brazil, at least at the entry point, at the first point of the journey, in Brazil or in Latin America in general?
Yeah, to be very honest with you, if you're selling enterprise level services, you can get away with that, but some companies expect some local service levels to be provided, like support or customer service and so on and so forth. But if your ticket is lower and you're selling a solution that can be sold like a low touch selling strategy solution, you can completely get away with having an office and having a team dedicated to Brazil. You will just need to have people that know the geography and speak and localize everything and so on and so forth. But if you're large, not you're large, but if your ticket is high, then you will most likely need to have at least some presence in the region.
What is the high? You know, how much? What's the size in your terms is high?
Okay, great question. So I would say starting 300. This is just out of the blue here, like $300 a month subscription, $400 a month subscription. Then it starts to require some human interaction. So people are paying $2,000. Some human interactions might be expected, but this is not an absolute rule. For example, Zapier. I don't know. Zapier doesn't even have a country. They don't have any presence in Latin America. As far as I know, I don't think they have Spanish-speaking support or whatever, but they're growing and they're selling and growing like crazy. And all their competitors, such as Segment as well, or Integromat, and all those data guys. And they can get away with that because they're selling to a more educated buyer, which are the tech professionals, and they speak English. But as a rule of thumb, if you're not selling to an audience that speaks English, once your product and your solution starts to require some human interaction, you will need some kind of presence in the geography. I mean, not geography, but at least speaking the language of the customer. And that's the case, for example, for Freshdesk, SharpSpring, and Pipedrive, for example. And all those guys, for them, at first, Pipedrive, I don't know how they're doing now, but I think they're still focusing more on channel. But it's not worth for them to open an office in every Latin American country, or even in none. And what they do is they find people that can represent them in those geographies, and they create some partnership agreements, and they just split the profits with those partners, and they can grow really fast without the need to hire, train, and maintain culture cohesion with a new office and new team. So, for example, Freshdesk, I talked to those guys, I think 2 months ago or so. So 100% of their sales that need to have human interaction in Latin America for help desk, CRM, and those complex solutions, they happen using partner integrators that sell Freshdesk for them. So Freshdesk does not need to have any employee that is speaking Portuguese or Spanish and talking to customers directly. The customers interact with the product is translated and localized to the customer, but they don't need to worry about having a team there. And the same applies for SharpSpring, Pipedrive. And the advantages with this model is you can grow in different geographies really fast, really fast if you have a partnership playbook. You pay them commissions upon success. You need to train your partners, and this is complicated work, but it can be done. And if you successfully do that, you will grow without growing headcount.
Yeah, when we talk about channel partners, for them it's really important the size of the business you can bring them. So, for example, if you're a SaaS company doing like $500,000 a year, would you be interesting enough for them to expand, or you should have a bigger business opportunity when it's relevant to talk to those channel partners in Latin America?
Sorry, Dennis, I didn't really, I lost you for a sec, and I didn't get the full question. Can you repeat?
Yeah, so when you work with channel partners, oftentimes the question arises is, what is the size of the business you can bring them to, so you become interesting and relevant to them? So if you're a SaaS business with $500,000, for example, or several $1 million in annual recurring revenue, when is the time you become interesting for those sales channel partners? Or maybe what is the size of the business they're interested? Because in many cases you just don't even exist in their universe until some point.
So in my experience, I don't think these channel partners care that much about the company's size. Of course they do, but not that much. Because what they care about is the product that this company is offering, can it be sold? Do my customers want that? And if it has differentials and the pricing is right, and it solves a clear pain, great. That helps me. I can sell this to my customers and provide services on top of it. And the second thing they look at is, what is my cut from this deal? How much do I make in commissions when I compare myself with your competitors?
And what is the typical practice of this, pricing for good sales channel partnership?
Great question. So if you are generating your own leads, so I am a partner for Freshdesk, and if I am generating my own leads, I think they pay like 20%, 25%, and on a monthly basis, as long as I help them retain that customer. And so I will be making 20%, 25% forever, as long as that customer is still alive. And I will be serving just like your customer success manager for the customer. And it's a great deal. And they can win the market against, for example, Salesforce, which also sometimes uses the same partners, but Salesforce starting price is much higher. And the channel partner can much more easily sell a Freshdesk license because it's cheaper, and sometimes it makes more sense. So this is it. You really need to understand what are the incentives for your partners, and the incentives, I would summarize them in two: how easy can it be sold, and second, how much do they make out of it? And with those two incentives, you don't really need to care how big of a company you are against other juggernauts, just like Salesforce, because you can pay Salesforce partners more, and your product can be easier to sell, and that's how you will win the market.
Yeah, it sounds that building chain sales in Latin America is a bit easier if you compare it to building the same sales in US or in Europe. Maybe it sounds like maybe less spoiled. The market is less spoiled in this stance.
Yeah,
and this is actually good because you can leverage growth, leverage it to make growth happen.
It's a somewhat blue ocean. I won't say blue ocean because it's not as blue as it once was, but you can easily find a vein if you have the right product for the market. And that's the hard thing to master. Is my product the right product for this market? Which is something that Pipedrive did tremendously well. They were perfect for the market needs. And that's
yeah. And when you build those relationships with sales channels, the distributors, the fact that you're from Europe, from Russia, from somewhere else, how easily those sales, those partners are starting to communicate and onboarding you. Like, does it take months, or like in China you need a year just talking to them? So
yeah, so it depends on the solution that you're selling. So the easier your solution is to be sold, the better. And what I see successful companies doing is, let's do one deal together. Let's focus on our first deal, and I will help you win this first deal. I will be your personal trainer. Find a lead, and I might even provide you a lead, which is something that Freshdesk does. For example, they have specific partners that they send all the inbound leads to. For example, and these partners that get leads from Freshdesk, they make a smaller commission because they're not generating the leads. But if you were doing this kind of relationship, you need to focus on having an early win as quick as possible to keep engagement and momentum, and even provide your partner with the leads and go there to the call with them and help them sell, and personal trainer for that guy. And once it's sold, great. Now you see that it's possible, and let me help you get better so that you can walk on your own. And that's how it's done. And just moving forward here, and another strategy, which is it requires more commitment than just channel and partnerships, which is M&A. So you find a company that suits your purposes, and you don't have the time to build a team and sometimes a solution, and you just buy a local company, and you immediately have a team and a localized product that you need to merge with yours, and you can grow in that geography. And that's exactly what Twilio did to expand in Brazil. So they bought a local company, and now they have an office, a team, the whole infrastructure with the telecommunication companies, and they can grow much faster than if they were starting from scratch and competing against the local guys. And the other expansion strategy is the direct one. So I am this company, and for example, Salesforce. I'm Salesforce. I want to grow in a large geography, such as Colombia again. I will open an office, set a sales team there, a customer success team there, support, and I will have branches everywhere. And that's what Zendesk does. And HubSpot is now doing this model. They have an office in Medellin, Colombia, and that's from where they support all their Latin American, at least South American customers.
Mm-hmm. And, I believe most of our participants are seed, pre-seed, maybe early Series A stage startups. So, what is in your opinion is early or the right timing to expand? Like, I have $100,000 in annual recurring revenue. Should I go for it, or maybe I more focus and get more traction on my local market? And if so should I start channel partners, direct sales? We're not talking about M&A, or a couple of words about it.
So if I was your investor, if I were on your board, my advice would be for you first find product market fit. You know that it works for a given problem, it works for a given set of customer, and great. Now you have a thing. You just need to find other customers to whom you need to sell to. And then you look for opportunities for international expansion. So this is my advice. You first need to find product market fit, and these need to be unquestionable if you want to expand to other geographies. But and another possibility is I have a product and this product does not fit my geography's needs. And I will pivot and I will keep the same product. I will just pivot to another market. I will try to sell it to a different geography. But if you're doing that, you know that you haven't yet found a product market fit, and you will be doing that as an experiment to understand if that market is a great fit for your product. And if you're doing that, I would not do that using resellers. Never. You can only scale through resellers when you clearly know your value proposition, your differentials. You clearly know how to coach and train local salespeople so that you can train others.
Mm-hmm. So, just is it right, fair understanding that if you are a very early startup, you still can go for it, and maybe you don't. Maybe you have like initial sales in Russia or in Ukraine, and you can start selling in Brazil, for example. It would be okay. You don't need, this big cash on your deposits to play this game.
No, right now at this COVID time, you don't. You just need to have a local, like someone that can walk you through the particularities and hire someone there, or some expatriates in Russia, in Ukraine, that are Brazilians or Latinos that can help you in those markets. That would be my advices. And moving ahead, I will go really quick here, and you will have these slides to read because we're running out of time. So where should I start from? This is, I will read through here. So LATAM is a network of markets tied together by differences and commonalities. So the first image, the yellow one, LATAM is not a one market. No, it's not. So LATAM is not Brazil and the Spanish-speaking countries. It's also not that. It's a set of different countries with some cultural particularities, and they are very similar, but they have some particularities among themselves. But you still need to take into account that you will need to deal with multiple currencies, with multiple regulations, and it's not as if you're growing to another country only. And as Dennis said, if you want to grow to a large market in one country, one regulation, and blah, 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 then I would advise you to go to Brazil if you don't want to deal with multiple regulatory issues. But if it's not the case, then you will need to analyze what's the best market for you. Here you find some data in terms of GDP size per country, and I would advise you to only look at those 5 countries here, because those are the significant ones in terms of total attainable market. And you can then scale and clone your operations to other markets and adapt. But I wouldn't go much below here on smaller markets first. They're the last ones you want to tap in, unless your product is a really niche one.
And speaking of, go to market, there, I know that a lot of things is happening in Chile, for example. like the Startup Chile Accelerator, and the country is quite advanced in terms of the technologies. There is a big market in Mexico. So if you're not expanding to Brazil, what would be the first country to go in Spanish-speaking market?
That's also a great question. There is no right answer for this. I would look at regulatory things, if you need to hire people or not, where you have connections, and the kind of product that you're selling. Is there a market for my product in this specific geography or not? And what I can tell you is Mexico used to be the gateway to Latin America, because the gringos just went south and they found Mexico, which was pretty close to home, and that was their first base. But now I'm seeing lots of other, if companies are opting to expand to Spanish-speaking countries first, I'm seeing lots of companies going first to Colombia instead of Chile, as you said. So many companies are opening offices in Medellin, in Bogota, and there is a scene there. And Argentina, they're in a tough position now for you to sell your product there because of their currency issues. Peru is smaller, but they're the highest growth, the one that grows the most, and that's interesting. So you will need to take a deeper look and analyze case by case, talk to people, and to assess what's the best path for you. So at the end, it really depends. Some other culture particularities, because we have 3 minutes here. The English proficiency in Latin America is quite low. You will see when you check the slides here. So if you compare with European countries, you'll see that Slovakia does much better than all Latin American countries here. And that's why I'm talking a lot about localization if you want to expand. Communication channels, WhatsApp is what people use all day, every day, and every Latino that has a smartphone because of WhatsApp. What else? Instagram is growing, and it is following the same trend as in the same global trend, like younger people, higher educated, and people that are leaving Facebook and using Instagram more. But Facebook is still very popular, especially among low-income people and older people. YouTube, these 90% year-over-year growth of big creators speaks for itself. I won't be talking anything further. Netflix, almost 20% of Netflix user base is in Latin America. And I'm not considering the Latinos in the US. So they're really dependent on the region. LinkedIn for B2B companies, it's great, but for some niches. So if you want to find people that work with tech, great, you'll find them here. And if you want to sell to tech people, marketers, or managers in big companies, you also find them on LinkedIn. Don't expect small and medium enterprises owners on LinkedIn. You will not find them there. Android is a monopoly, as Windows is here. Here you will find some other cultural aspects that you can read. And some final tips. Revisit this thing here and go from bottom to the top. This is my advice to all of you to understand, is it the right strategy for me? Is it the right moment? Do I have what it takes to expand? But most of the time, it's not the right time. And if you want to discuss, I'm all ears. You have my contact information. Some quick tips. Some are obvious, but they're worth being highlighted. Visit the country if you have the opportunity post-COVID in a couple of months before committing a lot of money to it. If you're committing not so much money, okay. But if you're committing a lot of money, visit the country, talk to people, see stuff. Test the waters before going all in. So start first with remotely, try doing this, and before you'll go all in. If you do not localize your product, don't expect mass adoption. Whenever possible, price in local currency. That's one thing. People avoid to buy solutions in dollar because the dollar is unpredictable. Not the dollar is unpredictable. Local currencies are unpredictable. So try to find a partner that can solve this for you. And my recommendation is eBanks. I don't work for them. I just think that they're the best solution, easiest and best solution to go for. Create an expansion thesis before you launch, which is make a plan, and find local peers and connections that you can count on. So you need to create a network in your market. You need to have someone you can discuss things with, other founders, other people in the industry. Just make those connections on LinkedIn before you expand, to save yourself money and time. If you have the money, hire some local experts to save you time, like consultancy firms that could help you with that. But I presume that's not the case for most of the people. And one thing that's great is also raise money from a good local VC, because if they're putting money on your business, they truly believe on the strategy. That's one thing. And the second one is you will have more support and people helping you cut corners and find the right people and not make mistakes. And if you're serious about any geography, I would sincerely advise you to find a partner there.
Yeah, this is a very important question. So if I would like to raise money from Brazilian or Latin American VC, how we are the strangers for them. We don't the network. They don't understand what's happening here, like in Russia or in Ukraine. So how to make the company fit in their investment thesis? Should they open an office? Should they spend a lot of time there? Should they hire local? So how the VCs think about it?
Great. So now Gustavo, the VC, is talking. The thing that I would be looking at is traction in that geography. If I see any sort of traction in Latin America from a company that hasn't even localized their solution and they're having good results already, that's great. I would investigate and most likely invest money on that. So before spending money and so on, just create some results and traction and bring people to help you assess the opportunity.
Yeah, it's speaking of practical steps. For example, I would like to raise 500K, 500K. I would like to raise a couple of $1 million or more. So would it be even possible to raise this early seed round up to $1 million from local VCs, given that you maybe have traction like $5,000-$10,000 in MRR, or you have to figure out the way how to fund and grow your business until you become a Series A company to raise from local VCs? So
yeah, to be frank, I would wait until maybe not the Series A, but most of the times, yeah, because you need to have a clear product market fit for you to expand to another market and not lose focus. And this is typically Series A stage, maybe Series B.
Mm-hmm. So in any way, those people, those who listen to us, they raise some money and from the local VCs, from their local VCs in their geographies who buy their thesis of expanding to Latin America, show the traction, and then try to raise from VCs there, maybe bigger rounds with bigger traction.
Perfect. And most likely the lead VC won't be the Latino VC. They will be following some other VCs that they know in your local geography, or a global VC. And but you want to have those kinds of allies to help you grow in those geographies.
And speaking of the relations with those VCs, for example, I have a company from Russia. They raise like $3 million series, pre-series A, for example, and maybe that they have some traction in Brazil. They are not that well connected with all the VCs there, but they have a lead for $2 million, for example. So if they start to cold contact into local VCs, so is it even possible to raise from them given this setup, or they need to build the longer relationships, like those startups traveling to Silicon Valley and spending like 3-6 months a year to build this network, like to become a local? So what's the game plan there?
So what would help if your current investors already have some relationships with the Latin American investors that could buy you lots of time? Because even though I don't know your company yet, I know that person and I trust that person's judgment. And if that person's money is on the line and they're investing more, I want to hear that. I want to check this opportunity. So this helps a lot. But if you have no connection and your investors don't have a connection, what I would advise you is to go cold call. Don't worry. If you have what people are looking for, which is traction and signs that it will work out, you will succeed after making a lot of effort. It won't be easy. Fundraising is never easy. It's a pain in the ass. But if you have the numbers, you have the solid foundation for that thesis, you will find someone that fits your
music for my ears, because I need constantly to repeat to the founders that traction, and again, traction is what VCs are looking across the globe.
Yeah. And so, Dennis, I will need to leave the meeting room. Some people are leaving already. I really appreciate everyone's time. I will ask Dennis to share your email addresses with me so that I can send you the deck. I forgot to input a link here, some links here that I wanted to share with resources that might be useful. And there is a recommended literature with great materials here. You can find data. And you can find me on my email. So g@SaaSholic.com. I'm available. Anything you want to discuss, I'm here. I might take a couple of days to reply, but I'm available and interested in starting conversations with all of you.
Yeah, Gustavo, thank you very much. It was a very productive conversation today. Very, intense in terms of the market insights. I hope that those who listen to us or who will listen to the recording will benefit and succeed in their decision and making the way to Latin American market, or clearly understand that it's not relevant for them. So, Gustavo, thank you for your time today.
Thanks, everyone. I really appreciate your presence. Sorry for the poor time management here, but I got really excited with the topic. Thanks, everyone.
Bye.
Bye-bye.